Hi, everyone. This is Jason Bjork of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is CEO of McAlvany Financial and McAlvany Group of Companies. He is host of the popular McAlvany Weekly Commentary podcast, and he just released a new book, The Intentional Legacy. David McAlvany, thank you for joining me again.
Jason, great to be with you again.
Now, David, Donald Trump's inauguration, hopefully it goes off without too many more hiccups, but it's supposed to occur on Friday. God willing, considering the stuff that's coming out with the Project Veritas videos. But in your opinion, how big of a mess is Donald Trump inheriting in terms of the U.S. economy, in terms of the banking system, in terms of just how Americans view government and, how people already, even though Donald Trump hasn't even been in office for 6 months or 12 months, already hate him?
Yeah, what is he inheriting? That's a great question. The context is pretty critical. The global system is very leveraged, $217 trillion in debt, which is over 3 times the current global GDP, better than 300% debt to GDP if you're looking at it on a global basis. In the United States, we're certainly past the Reinhart-Rogoff threshold of 90% debt to GDP here in the United States. The banking system, very leveraged, and that leaves very little room to maneuver. So I think what he's inheriting is a world that's priced for perfection and needs perfection. And I don't know about you, but while there's hope attached to this particular political ticket, I don't think he's perfect. Or the world is perfect. So we could have some significant hiccups coming into this year. There's the assumption that the baton is going to be effectively passed from monetary policy to fiscal policy, but I don't think the market has allowed for enough of a lag between the cessation of monetary policy and the approval and implementation of actual fiscal dollar spending. So I think between now and the fourth quarter could be really interesting in the financial markets because you've got things pretty well priced for perfection. And as I say, I'm just not sure that we live in a perfect world or have a perfect president. Which again, it's all about expectations. The market might have gotten a little ahead of itself.
I really don't believe, what Janet Yellen and the Federal Reserve and President Obama have been saying for the last few years, how well the economy has been doing. They've been going to colleges and saying, you guys are lucky graduating college seniors, how good of a job market you guys are coming into. People in reality know the truth about that situation. When I look at statistics that say 62% of Americans have $1,000 or less in their checking or savings accounts, that doesn't jive with this rhetoric that we hear from politically biased central bankers and also politicians like Barack Obama. So, I think Trump has inherited an enormous mess. We have the Dow almost at 20,000, right? But yet we have like around $20 trillion in debt, not counting the real number. So I don't think, any of those things are sustainable in the long term.
You're right, and I think financial markets represent a totally different reality than what people are experiencing. So when you have monetary policy which has remained accommodative, not only here but sort of the global liquidity flows, still over $2 trillion coming from central banks, the ECB and the Bank of Japan, which continue to inflate asset prices. That's great for financial markets. That's great for financial market participants. That's great for people that had a balance sheet. But there's a bunch of people in the United States and around the world who don't have much of a balance sheet and don't have much in terms of income coming in, live paycheck to paycheck, and life is not getting easier. It's actually getting harder. And what's our best evidence for the man in the street saying something's not quite right? Well, we're talking about the inauguration, aren't we? We're talking about someone who was not supposed to be president. We're talking about, I remember Ian Bremmer just 6 months ago saying, look, Trump has less than a 5% chance of winning. Yeah, this is one of the sort of great political analysts of our time. Less than 5%? What this represents is a lot more people than the establishment would have you believe being upset with the status quo and not feeling included in the largesse and the benefits of what has been created by monetary policy since 2008 and 2009. So, financial markets, great. They're very overpriced and somewhat frail if you're looking for follow-through between now and the end of the year. But the baseline expectation is something's not working for us. And again, it's showing up in politics. If you're reading the social trends, if you will, and looking at how people are voting, they don't like it. They don't like it. And I think that's worth keeping in mind.
Yeah, the political commentators, with their polling, whether it was manipulated or not, they didn't see this rise coming. First, it was Brexit, economic nationalism. I think there's a taxpayer revolt going on, David, among the middle class in the UK, in Western Europe, in countries like Germany and France, and in the United States, where the taxpayer just says, we can't afford all these additional taxes that are being layered on. My standard of living is declining, and yet here you guys are. You want more immigration of immigrants that are not necessarily productive. You want to raise taxes. You want more of these government spending plans. And then we hear, the plans for future bank bailouts. I don't know if you caught this, but the Federal Reserve released a really weird press release about a month ago talking about how they're not going to do any more bank bailouts, at least in public they're not. And they think the banks in the US and Europe only need about $70 billion in capital injection, but that the banks were going to have to sell bank shares, equity, and also long-term bank debt. So I was thinking to myself, this press release, another contradictory press release, how are the bankers going to raise that money when the central bankers aren't going to buy it? Are they going to start to go after retirement accounts then and enforce people for national security to either buy government bonds or bank shares or bank debt? What's your opinion on that?
Well, I mean, perhaps another possibility is just the nationalization of the banking sector. We won't bail you out; we'll just take you over. It's not a bailout; it's a roll-up, and we now control it all. So that's a possibility, and try to argue for it and say, well, we're just gonna capture all the benefits for the state and ultimately the taxpayer. That's what's fair. We can't allow the bailout benefits to go to private parties. And so, we're wiping out equity and we're wiping out debt, and we're going to pass on the benefits of the taxpayer at some point in the future. I mean, think of kind of a model like Fannie Mae and Freddie Mac. State controlled, and maybe they'll make an argument at some point for putting it back into the marketplace.
Do you think the bankers would go for that then, given their huge lobbying power and how much bonuses they're getting? Because wouldn't that start to put, restrictions on the amount of bonuses they can get? Or do you think they're not going to have a choice then?
It's difficult for me to really imagine that the nationalization of the banking sector under Donald Trump, in part because, this is his bread and butter has been made borrowing from banks and leveraging up, and you're talking about a completely different environment, a different world, where finance is really not available unless you're politically connected. So I don't think that's a high probability, but stranger things have happened.
I want to ask you about Trump's cabinet. Now, obviously, there's allegations of corruption already, but he's bringing on people who are billionaires, who have created jobs, who have created new products and services. These people have record amounts of business experience. So the potential is there to start fixing the economy, start helping the private sector, especially, small businesses and medium-sized businesses like your business, and giving guys like businesses that size a chance to compete against larger corporations. Are you cautiously optimistic that Trump can reduce some of the regulations and red tape, like the Obamacare tax, the payroll tax, some of these other things? Or do you think there's going to be a lot of problems with corruption and Trump's not going to be able to get done anywhere near what he's hoping to get done?
Yeah, corruption is something that is a pandemic. You go anywhere in the world, and it's one of the biggest issues of our day. You can be on the African continent, you can be in Central or South America, you can be in the United States. We do a really good job of prettying up the pig, and it doesn't look so bad, it doesn't look so ugly here in the U.S., and we've just found ways to institutionalize it and make it look and feel better, a little less dirty. Do I think it's going to be any different under the Trump administration? No, I don't think it's going to be any different. I don't. I know some very politically connected families that are going to make fortunes during the Trump administration, and I think to myself, very interesting people to go hang out and have a beer with, but I really don't like the way they do business. Not in past administrations, and in the current administration, it's just going to be like it's on steroids. So, the opportunities that are flowing from Washington to the private sector, if you're particularly connected, there's a lot of room for corruption in there, and I've seen it. one step removed, and I think it's going to be even worse in the Trump administration. I completely agree with you that we've got more business experience coming into this administration than probably any in U.S. history. Which, if there's any hope that I have, is that there is the opportunity for the free market to create workarounds. The last thing I want to see is the size and scale of the socialist state become so stifling to ideas and creativity that entrepreneurs go someplace else in the world to launch their businesses and careers and paths toward success. It's very probable that there is an entrepreneurial revolution in this context. I don't think that corruption will go away, and I'm not saying that they're part and parcel, one goes with the other, but one will flourish, and hopefully it is eclipsed. I hope the corruption is eclipsed by massive innovation, new ideas, technological change. These would be great. And he's a cut the red tape guy. I've looked at a number of things that have been constrained by the EPA for the last 4, 5, 6 years, just looking at share price performance, and just since the election, it's unbelievable to see things move up 5 and 10-fold in anticipation of finally the governmental red tape clearing and there being somebody with some business savvy opening up jobs and opportunities relating to the resource sector. So. What I tell my kids all the time is there's no person who's good, no person who's bad. Everyone's a combination of the two. And I think we're going to end up seeing some really neat things in the Trump administration and some things that we're absolutely horrified by because he's a human being, and we got to take the good with the bad.
Yeah, great points. Yeah, I've been reading up actually articles about what he can do for the technology sector, specifically biotechnology, and it looks like he's going to open up the gates there with his appointees in the FDA to accelerate investment and new drugs and growth then for stem cell research and anti-aging. So Peter Thiel and some of the other venture capitalists that are FDA experts that have invested lots into, navigating around the FDA and in biotechnology companies, those guys are going to be his appointees. So that industry specifically could really take off and, could really help with future cures to reduce aging in humans and potentially prolong life or regrow organs and skin and other damaged cells. So it's very interesting from that perspective. But, any little scandal now, David, the way the Democrats and the mainstream media are acting, who are basically all the mainstream media, it seems to me, is anti-Trump, even Fox News, most of Fox News for the most part. It seems like, any little scandal, any Twitter message, they're going to try to turn like a little anthill into an enormous scandal. And it seems like they're basically trying to impeach him almost on a daily basis, and he hasn't even gotten into office yet.
Yeah, it's interesting, and I mean, this is when I compare notes with my dad. This is what I conclude. If there's anything that I really like about Trump, it's all the people that are lined up against him. I mean, I don't know that I like him. I just like the fact that there's a bunch of people that I don't like who hate him. And I think, well, he can't be all bad.
The enemy of my enemy is my friend.
That's exactly. You got it, Jason. That's right.
Yeah, it's kind of Machiavellian, but it might work in this. I'm cautiously optimistic on Trump. I don't think it's fair to pass any judgment on him, David, until we've seen, at least 6 or 12 months of him trying to implement some of the things he's promised. So, I think the people out there like Nicole Kidman or Jim Brown who, voted for Hillary Clinton and, she's from Hollywood, professional athlete. So I think, they have an open mind. So I think the rest of the country should take that view that, let's give him 6 or 12 months. Let's see if what he does, what he says. That's the thing about politicians, though. They almost never do what they say.
Yeah, it is what it is. He's elected, right? So you're right. Give him a chance to do something, and we can get far more critical once he starts implementing policies and getting things done, whether we like it or don't like it. At this point, there's a lot more that we don't know than that we do.
Exactly. Now, I want to transition. You interviewed Russell Napier that was released earlier today. He talks about correlations and the U.S. dollar and gold rising. Now, normally in the past, the dollar and gold are contra assets, just like stocks and safer bonds are supposed to be contra. So when one thing is rising, the other one's supposed to be going down. Do you see a scenario then where the U.S. dollar index continues to rise and gold price in U.S. dollars also starts to rise?
Yeah, and I think the key word to emphasize is normally, because there are plenty of historical exceptions to the rule. I mean, if you go back to the 1970s, the dollar was in decline through the early 70s up until about, let's say 76, 77. It begins to stabilize in the late 70s, and you'd think, well, shouldn't that take some of the energy out of the gold market if it's no longer in free fall? That is, the dollar's no longer in free fall, thus the impetus for the other side of the trade, gold going higher. And in fact, the dollar stabilizes, moves sideways, starts to inch up on occasion, and yet gold is just tearing higher towards 875 and what was the ultimate peak in that time frame. Plenty of other examples too. So I think the key word is normal. Normally, you do see that connection, and I think one of the things that we see is a massive demand for gold globally, which again, from a supply and demand standpoint, drives the price higher, even if the price in dollar terms could be impaired. I mean, think of it this way: maybe gold performs much better in yen and euro terms than it does in dollar terms, but that doesn't mean that it can't still go up in U.S. dollar terms. If the dollar is strong relative to those other currencies, then it's just a question about performance, again, in yen gold or euro gold. I think the dollar can go up, gold can go up, and there's reasons for seeing weakness in multiple currencies around the world. Gold shines even more so in those currencies. And, should it be interesting to a U.S. investor? From several vantage points. And one that Russell and I talked about was, the vantage point of counterparty risk, having a financial asset which is not constrained or locked down inside the financial system. That's a benefit. And we saw, being in the gold business for almost 50 years, we saw a very unique character change in the market, 2008 and 2009, where large purchasers coming in at $1, $5, $10, $50 million at a time, buying gold bullion, and whether they were wanting to store it, in their physical possession or someplace else in the world, they didn't trust their counterparties. They looked across the street and said, "Look, that's our custodian right there," and plenty of hedge funds in New York just said, "We can't do this. We've got all our eggs in one basket." They shut down, and we're hosed. So there's that element where counterparty risk comes back into play, and kind of doesn't matter what the dollar's doing. If you're concerned about counterparty risk, there is no correlation there. There's a number of other things that I think would drive the gold price higher in the next couple of years, but those are at least a sampling.
Yeah, with Donald Trump, I also see the likelihood of inflation increasing a lot, whether the government statistics in the U.S. count it or not. I see inflation occurring in a couple different ways. So if Donald Trump is successful with, his infrastructure programs, his jobs programs, that would make the velocity of money here in the United States in the real economy start to increase again, and that would be inflationary with wage growth and the money turnover effect going throughout the economy. But if Donald Trump is unsuccessful with his spending programs, his infrastructure programs, his defense and building a wall, the debt could explode. We could have a lot worse stagflation then with his supply side stimulus. And then, that could also trigger inflationary worries. The bond market could start to, raise interest rates a lot higher, and that could set off inflationary worries as well.
Yeah, to some degree, we already have stagflation, and I'd agree with you. We could see an acceleration of that trend where, jobs have improved, so we're under 5% on the jobless rate, and that's pretty neat. But you look at the quality of jobs created, and it's a big difference now versus 10 years ago, 20 years ago. More people are working. More people are working two jobs. More people are working jobs with scant benefits, and they're doing what they can and living paycheck to paycheck. Whereas maybe 10 years ago, they actually had a little extra at the end of the month and could save and invest and do other things. Maybe just go out and play. So the idea that there is a degree of stagnation, even while we're seeing consumer price inflation. I think this is a reality. Perhaps one of the big things that could undercut the inflationary trend, at least in terms of consumer prices, is if Trump really does liberalize his approach to energy, and when we move towards 100% energy independence, in which case, it's pretty devastating to the oil patch. For the oil investor, not so good. Prices come down for the consumer. It's a massive boon. So we'll just have to see what counterbalancing forces he introduces.
Yeah, I mean, there's been so many presidents, David, that have promised energy independence. I think it started even before Jimmy Carter promising energy independence. And yet the U.S., even after the shale oil revolution that we've had since 2008, which I think was financed a lot by, junk bonds and shale oil debt, Federal Reserve backing it on Wall Street. So a lot of those companies weren't really making money even when the oil price was at $90 or $100. They weren't generating consistent free cash flow. So the U.S. was still importing, I think, 9 or 10 million barrels of oil per day despite that shale boom. So we'll have to see about the energy independence. If we do have energy independence, I don't think it's going to be because of an oil revolution. It'll be because, renewables increase efficiency. So solar panels can increase to 90% or something like that. I don't know how far off we are from retail commercial solar panels being that way. I want to ask you now about a strong dollar. Now, when I hear hedge fund managers speak who aren't libertarian or Austrian school like you and me, they warn about the strong dollar. They talk about deflation in that. But how much damage, in your opinion, can a strong dollar, so that's the dollar index being 105 or higher, can that do to the global economy?
Well, yeah, the strong dollar, the primary damage is overseas, and then it gets transmitted back to us on sort of a negative feedback loop. So you could say, on a one-off basis, a stronger dollar is good for the U.S. and great for the U.S. consumer. It's the consequences, say, 3, 6, 12 months down the line, where all of a sudden the capital flows, which might otherwise have gone around the world through the emerging markets and been recirculated, aren't really doing that. And you see an even stronger decline in terms of global trade and global economic activity. So does the strong dollar impact the rest of the world negatively? It does. Does it impact us negatively? On a delayed basis.
So then you would think then that the crisis, when the next global financial crisis does occur, it will most likely, if the dollar index continues to strengthen, it will hurt the emerging markets first. It will hurt their government debt in emerging markets. It will hurt the emerging market banks first, and the private sector corporations in foreign emerging market countries that have over $9 trillion first. And so that kind of, from a historical standpoint, David, that kind of sounds like what happened prior to the October 1929 crash, how the rest of the global economy was already in huge recession, depression then, and a lot of flight capital came to the United States prior to that October 1929 crash because they thought the U.S. wouldn't crash because compared to other countries, it was doing so much better.
You're right. The weakest hands would fold first, and where emerging markets, government debt and corporate debt, for that matter, has been priced in U.S. dollars. The differential between what you owe and now the hurdle to pay it back because you're being stretched in the currency exchange. Makes it really kind of a fish or cut bait moment for many institutions and corporations and entities. Do I keep on paying or do I just default? And so, yeah, you see the weakest hands fold first in the emerging markets. Banking sectors in Europe are very strained. Classic case in point, if you're looking at sort of the dominoes to fall, a country like Turkey. Turkey's got several $100 billion in foreign-denominated debt, and as the Turkish lira has gone down and the U.S. dollar has gone up, it's put them in a difficult spot. You've seen the effective weight and strain of that debt increase close to 20%, and that's just in 1 year. And that's because the currencies have shifted, and the burden of payback is much greater. Where do the dominoes begin to fall? If you have a Turkish default on debt, you've got massive implications because actually a couple $100 billion of that is held in European banks. And so now you've got the banking sector in Europe, which is not exactly doing well. Now somebody's kind of cutting them off at the knees. So where do the dominoes begin to fall from there? does the ECB have the ability to backstop all of that? Are they willing to? Or is that the final blow to the EMU, the European Monetary Union? And we live in such fascinating times, Jason, and so many of these things are converging in 2017, 2018. I think the next 2, 3, 4 years are the best times for an investor to be paying attention, not be going on autopilot. Ironically, most investors are going on autopilot right now, which is shocking to me. But passive investing is becoming the trend, as opposed to actively being involved and engaged in managing assets. So, brilliant time to be in the business, and brilliant time to be thinking about these things and the implications of them.
Yeah, to agree with your points there, I don't think the European Central Bank or ECB has the ammunition to deal with that crisis all by themselves. We know from getting one-time partial audit of the Federal Reserve and other Freedom of Information Acts that the Federal Reserve has very large currency swap lines with the European Central Bank in times of turmoil, when European banks are going bad, when European country government debt is bad. So the Federal Reserve can open up these trillions of dollars in currency swap lines. So I would think if there's a problem with Turkey, I think that's what would happen. I don't think they would be publicly announcing that on the mainstream financial media. I don't think we'd see, Janet Yellen or any of the people at the Federal Reserve or Mario Draghi at the ECB going and saying, oh, we just did a large currency swap line, take care of everything, don't worry about it. It's perverse, though, I think, David, from the standpoint that, we have a lot of these emerging markets talk about wanting to get out of the dollar, create a new global financial system, and yet here they are, overburdened with record amounts of dollar-denominated debt. So it just seems to me, when I think about their long-term strategy, they're on the hook for so much dollar-denominated debt, and yet they don't want the dollar being part of the global financial system, or at least like the main part of the dollar standard that it is right now.
Yeah, and that part of this is folks who are willing to finance things, and they just have very short memories. So lessons that they could have learned 2 years ago, 5 years ago, 7 years ago, or at any interval through the last 100 years if they were students of financial history, and they're willing to make the same mistakes all over again.
Now, David, I want to transition again and ask you about the war on cash. You've had people like Carmen Reinhart and others on. I think that's one of the best interviews you've had in the last 12 months. Do you think then that this war on cash that looks like it's exploding all over the globe, do you think then the next logical step for the central bankers and these ivory tower academics that their theories don't work in the real world, do you think then the next step is a war on gold after that?
Well, I mean, the theme of the last 5 years at least has been financial repression, and that we've seen repression in the form of lowering interest rates to the zero bound, even going negative, and in many other ways too, and that is only tolerable for a short period of time. If financial repression is here to stay, then of course there's going to be a war on cash, because you have to corral investors into what Carmen Reinhart liked to call captive audiences, where they don't have choice, and they just have to sort of take it because there are no options. Once you've destroyed cash in that sense, or changed the nature of it and gone digital, the question is, does the human spirit desire a greater sense of autonomy and freedom? And do you see people move to the black market in a variety of different ways? And is gold a part of that? And I think I think history is replete with instances of, if you create pressure on a particular group, they will move and try to renegotiate in ways that give them, again, distance from the pressure. If you're playing a chess match, and interestingly enough, Mr. Rogoff is a grand chess master. Fascinating, because when you live in the world of chess, all you're dealing with is a closed system. There is a limited number of moves on the chessboard. Even though they are many, there are thousands of them, there is still finite in number. So, trying to figure out what works in a closed system is what his expertise is. And I think he's like many thinkers, many economists in that same boat. They're assuming that there are finite choices. And this again goes back to something we talked about earlier. Under the Trump administration, perhaps there is a renaissance of entrepreneurial creativity and risk-taking. And one thing that you don't have in sort of group of economists is very much creative thought. Lots of mathematics these days, not a whole lot of creativity. If you wanted a solution to our economic problems, it's not going to come from an economist. It's going to come from someone who operates in the economy as an entrepreneur. And so I look at this sort of finite universe, the chessboard, if you will, that Rogoff has tried to set in motion, control cash, maybe even ultimately control gold. And I think to myself, it's a bit naive because we actually have an infinite number of choices and an infinite number of workarounds, and that's the beauty of the human spirit. You push, I'll pull. You can do anything to me to create infinite pain, and I will squirm and maneuver and figure a way out. I will figure a way out because that's what's in me, whether it's a survival instinct or what have you. I have infinite choices. I do have infinite choices, even if you are trying to convince me that they are finite in nature. So to me, controlling cash and controlling gold, it is like trying to convince people that they only have one choice, two choices, three choices. Damn that all. We have so many choices, and this is, again, where the black market flourishes. In times of real stress and strain, people come up with all kinds of currency options.
Yeah, I mean, Mother Nature, whether it's a river trying to get around a rock or some other impediment, it figures out a way for the water to seep through cracks or go over, under, or through something eventually over time. And that's the way, I think the free market reacts to when government tries to set up these ridiculous coercive obstacles or tax laws. It creates just ridiculous unintended consequences that the central planners can't think about. But, I think owning gold and silver, physical precious metals outside the system, storing in different countries is a good idea. Definitely owning some cash now for opportunity in case there's a crash in asset prices, like a stock market crash. You want the liquidity available to take advantage of an opportunity like that. Because, when the stocks were cheap after the 2008 crash, there was a lot of great bargains, and my dad and I were buying up a lot of stocks because we had cash. But what scares me, though, David, is what the government is planning on doing to anyone holding cash. So what types of options do you think? Are people going to have to be more open now to taking cash out of the banking system and holding it, and then once there's opportunities to buy assets on sale, bringing it back into the system? Do you think people are going to have to be creative like that based on, what these crazy academics are doing and planning?
It's not just the crazy things that are being proposed by academics today. We have so much faith in a system which is really held together. Although it's neat and slick and everything from a technological standpoint, it's held together by chewing gum and baling wire. I mean, if we understood the underbelly of the financial world and how often on a daily basis we come close to catastrophe. Just yesterday, I went to pick up my sons from their jiu-jitsu class, and the class was canceled because the lights went out. Power was out for about 5 hours in downtown Durango. And, I thought, well, I'll swing by the store and pick up some food. And, they weren't transacting business. They weren't transacting business because the majority of people are coming through there with debit cards and credit cards, and they weren't willing to transact any business. Finally, they open up, and it's on a cash-only basis. It's on a cash-only basis. And I'm thinking to myself, half the parking lot was here to shop, and they just drove away empty-handed. I'm walking in with a couple of grants in my pocket, and I'm going to get what I need. And that's the thing. There's limitations to the system and way too much faith in a system which does have hiccups for whatever reason. I mean, Jason, you and I spend a lot of time thinking about the financial system and frailties in pricing and whether things are overvalued or undervalued, but we have so much confidence in technology today. I tell you what I'm doing right now. I'm building a massive library, and I'm doing it because I can do it for pennies on the dollar. Pennies on the dollar. And to me, I think back to the ancient libraries, and I think we had to recreate the experience of thousands of years learned wisdom because those libraries were destroyed. And today, people operate as if, I'll just find it on Google. Everything I need is online. Yeah, I know, but when the system goes down, for whatever reason, if it goes down, if it's unavailable, what do people do when they can't check Yelp for a restaurant review? I mean, if you can't get money from an ATM machine, I think there are system frailties that people don't pay attention to. Frankly, it's emotionally difficult to sort of think through and process them. I'm grateful to have a little bit of cash on hand outside of the banking system. You're right. Right now, as an investor, should you have more cash? Maybe it's in the banking system, but it's at least in cash and not subject to massive devaluation either in the stock or bond market. Yeah, I think that makes sense. Couldn't agree with you more. Do physical metals make sense today? Absolutely. Do I like silver compared to gold? Sure, the 70-to-1 ratio, it's a compelling value. Do I like gold compared to silver? Yeah, if I'm running across the southern or northern border, I'd rather have gold in my backpack than, Jason, maybe that sounds crazy to some of your listeners, but we live in crazy times, and unprecedented things continue to happen. If there's anything I could encourage your listeners to do, it's be prepared for surprise. Be prepared for surprise. Some of it's going to be positive. Some of it's going to be negative. And if you are not fortified emotionally for surprise and shock, look, you're going to miss opportunities. You know that cash goes a long way in the context of crisis. And, I remember Plaza Hotel was generating about $100,000 in income through the restaurant and bar, even during the Great Depression. It was a hopping spot. People liked it. And no one would buy the hotel, restaurant, and bar lock, stock, and barrel for $100,000 in the context of the Great Depression. For sale, nobody would buy it. Why? Because even those who had cash were in panic and didn't know how to deal with uncertainties. They could not keep a cool head. I think the opportunities that we have that lie ahead not only rely on the resources that you safeguard, and I'm talking about tangible resources, financial resources, but maybe even more importantly, the resources that we often neglect, the intangibles. What goes on inside your heart and mind? Are you someone who, again, buckles under pressure, or actually does pretty well, can think clear-headedly, even when the chips are down, like the poise of the boy on the burning deck? I am fascinated by what we're stepping into. I hope there's more opportunity, and that we're all pleasantly surprised by the Trump administration. But one of the things that Russell and I talked about in this week's commentary is that the better things are here in the U.S. and the stronger the dollar becomes, the worse they are in the rest of the world. And the problem is $1 trillion in fiscal spending here doesn't fix tens of trillions of dollars of deflated assets the rest of the world over. And the consequences into the financial system globally, deeply interconnected on a financial basis. And so any vulnerabilities there ultimately do circle back around to us. So, positive here may end up being negative here. Just stick around.
Yeah, David, I think the elites, I don't think they're going to allow the asset prices to stay low for a long period of time without drastically more interventions, more and more desperation. It sounds like they want to go to the SDR in the next crisis. We know they're doing these currency swaps. They don't have to declare. There's no auditing of central banks, so we don't know the real amounts, and they don't have to declare them on their balance sheet. So there's really nothing to stop them from printing trillions of currency swaps and trying to boost up the asset prices again until people totally lose faith in these government-issued fiat currencies. Maybe that's what the breaking point is, because there's really nothing behind the currencies. But to add to your point there about having cash, when there's blood on the streets, during 2008, there were so many good quality bargains. The more cash you had, the better. In the gold and silver mining sector, Franco-Nevada, which is the world's largest gold and silver royalty company, well, actually, Silver Wheaton's the largest one, but Franco's the largest gold royalty one. And one of the gold and silver miners, Coeur d'Alene, was bringing a new mine in Mexico into production, and they had a cash shortfall because the mine wasn't coming online on time. They couldn't raise any money. So they were desperate to get $80 million from anyone, and Franco-Nevada had access to, cash and credit of $80 million, and Franco-Nevada bought over $1 billion worth of gold in the ground from a producing mine for $80 million. So the bargains are, more than tenfold returns. I'm not saying you're always going to get that, but if you have that type of cash in an event like that, the potential for, life-changing investments are there.
Well, real money is made when you buy something. There's no doubt about that. And you're talking about those opportunities in life that maybe come around once or twice in a lifetime that represent bargains that you have to be prepared, both in terms of the resources and the will to take advantage of them.
Now, I want to ask you about your book. I'm done with the first chapter. I didn't realize you had to overcome so much in your life in order to get to the place that you are now. You know, you're very confident now. You've accomplished so much from one entrepreneur to another. What do you think then that all the bad experiences that you've had to overcome, do you think that they've made you a much better person for surviving them and learning how to deal with them?
Yeah, I mean, I think my childhood had some rough patches, and certainly I learned a lot. It matured me in ways that might have taken another 30 or 40 years to gain insight on certain issues, and I'm grateful for that. I'm grateful that the learning curve was steep, and I look back and I'm grateful that relationships that were damaged in that time frame have been repaired. We've been very deliberate about fixing some things and forgiving where that's been necessary. This kind of goes back to the whole notion that we have lots of resources to manage, and tangibles are one thing, intangibles are another. And being in the wealth management business, my father and I combined over 50 years, we've seen time and time again where at the reading of a will, what happens? It's a free-for-all for stuff, and everyone forgets family identity and becomes very self-interested. What's mine? How soon do I get it? And in many instances, the money's spent, the money's gone, and the checks have barely cleared. And it's a fascinating thing to witness in the wealth management space that lots of folks will do a great job managing financial resources and not do a good job managing resources on the intangible side. I'm talking about intellectual, spiritual, emotional resources. And these are the things that I think are built through difficulty. I look at challenge and say, I will be better on the other side of it, whatever I experience in life. One of the stories that I tell later on in the book is how my wife went through a period of time where she had cancer. And that was one of those things that brought us together as a couple. And I realized that hard times can be devastating to couples. But for us, our response to it, I think, was a healthy response, and it allowed for our love to grow, to deepen, and for us to come out the other side a much stronger couple. So what did we do? We managed resources through a challenging period of time and benefited significantly from it. The book is about financial resources, but it's also about all of the other things that I think families need to put in motion, to really adequately be stewards of every aspect of their life.
Yeah, they don't teach any of this stuff really in school, so you're reliant on either when you're an adult like me, you have to read self-help books if you didn't learn it from friends or family members growing up. So it's a skill that probably should have been taught, learning to be mentally tough and deal with obstacles and hurdles in life better. But it's not something where there's classes for that in lower levels of school. Instead, I mean, there's so many skills in the educational system. I think in the U.S. is basically broken. We're not teaching kids entrepreneurship or business skills or things like that, how to be a productive adult, even how to balance a checking account, and basic personal finance stuff is not even taught to high school students or junior high school students. And yet, we're expecting once you graduate college, you're dumped with all these things on your plate and you're expected to know them. And a lot of people are failing at them and they haven't been taught them for their whole life. So it's not all their fault.
Yeah, we could look at Graham and Dodd and say, here's the Bible of value investing. And the reality is very few people know how to represent or pursue value of any sort. You're right. There's certain bankruptcy in our school system today. Do kids learn how to choose value in the friendships that they create? You look at who's popular and who's not, and what is the basis for friendship and relationship today? When someone's down and out, are people betting on that stock? Or is that when people are actually getting kicked to the curb from a social or psychological perspective? And yet, I think some of the most successful people I know were the people who were not popular, who would have been, their stock would have been rising in high school and college, and yet they've really done nothing with their lives. And yet there's other people whose stock didn't even register. It would have been like a pink sheets on the pink sheets. And yet they've done so much. And I don't think we know how to represent or pursue or recognize value in almost any category, which says to me, again, the educational system is broken, but the conversations that we have at home around the dinner table are also pretty hollowed out. Why? Because these are things that need to be identified. What makes a person valuable? How do you be a loyal friend? I mean, you may think, what does it have to do with financial commentary? It has everything to do with financial commentary, because we're talking about a pattern that crosses over from one category of your life to another, where you know what value is, you know when to press in and buy it, and sometimes you know when to avoid something which is entirely toxic. So, I mean, to me, there's a great deal of accounting work that takes place in our lives as we look at the blessings that we have, the curses that we have to deal with, things that we've inherited from our family, things that can be tremendous assets or liabilities. And how do you deal with those? How do you deal with those? That's a lot of what I try to deal with in the book, The Intentional Legacy, is, how do you deal with your own personal assets and liabilities? And are you creating assets for future generations in every category, both tangible and intangible, or are you the liability factory?
Yeah, I think your book is definitely a self-help book, besides, just talking about investing and some other business principles. You have to have a solid grounding with mastering your psychology. Benjamin Graham even talks about this. Mr. Market is manic depressive. So you don't want to be a manic depressive investor. You want to have, be cool, calm, and collective when everyone else around you is panicking like crazy. And that's what brings you a lot of different opportunities in life, whether it's through investing or good friendships or things like that. Well, David, I really enjoyed this discussion. I could talk to you for a couple more hours because you're so well read in philosophy and history and investing in markets. But for listeners out there who we do get a lot of emails from potential people who would be interested in McAlvany, you managing their money, who enjoy similar investing philosophy to you and me. How do they contact you then?
Yeah, let me give you two places. If someone's interested in the book, I mean, of course, you can go to Amazon, or the book website is davidmcalvany.com. So if you're interested in getting a copy and reading it, either Amazon or davidmcalvany.com. If you're interested in figuring out who we are as a financial organization, then just take the first name off, McAlvany.com, and you can kind of navigate from our wealth management site to our precious metals brokerage site. And new to our wealth management site, which we launch in the second quarter of this year, the team's in place, the technology's in place, and we're rolling out a short fund with Doug Noland, who's been 25 years on the short side, and that'll be one new offering in our wealth management staple. So some traditionally asset-managed funds, and then this one's a little bit more exotic and probably more for an institution or pension fund looking to create a protective sleeve if they're required to have an equity exposure. This reduces some volatility. So we've got a phenomenal team. I'm so proud of the folks that are working with us and where we're going in 2017 and 2018. There's going to be some great opportunities, and would love to get to know your listeners if what we have to offer is of value to them.
Yeah, and with crisis comes opportunity, as the Chinese proverb goes. But I highly recommend my listeners also, and this is free, go and listen each week to the McAlvany Weekly Commentary. Since I found you, I think in 2008 or 2009, I haven't missed more than one or two episodes, and those were, intentionally skipped because I've interviewed Richard Duncan a bunch of times, and I'm just tired. Even though he's a smart guy, I think he's a big government I think he's a big government, apologist for the IMF and the World Bank. So I'm just
having dinner with him on a number of occasions, it's interesting. He has many internal leanings which are Austrian. I think he gets to the point where he's desperately afraid of the consequences in front of us, and caves to non-Austrian solutions. But actually, in terms of his background, in the way he thinks, he's very sympathetic to the Austrian school. But now I understand we get the same feedback from some of our listeners, a little bit, but not too much of some of those kinds of opinions. Well, Jason, great to be on the program with you again.
Thank you for your time, David, and hopefully we can have you back on again in a couple months and make this a routine conversation.
I look forward to it. We're going to have a lot to talk about in the Trump administration.